There's three main types of investors. Retail, those are like do-it-yourself people who have brokerage accounts. Then there's advisors. Those people manage $30 trillion in America. And that's where the bulk of the money is. That's the crowd this ETF is namely going after. And they love ETFs. Advisors, ETFs are their favorite vehicle to use for anything. So they're very comfortable with them. They trust them. They use BlackRock ETFs all the time. So that to me is the main market that would open up with the ETF for Bitcoin. Then you have institutions. So I would see that down the line, the owners of the Bitcoin ETF are, maybe 20% retail, 60% advisors, and maybe another 20% institutional.
Senior Bloomberg ETF analyst Eric Balchunas has been a prominent personality in the crypto space since BlackRock applied for a spot Bitcoin exchange-traded fund last June. Last year, before the SEC gave the green light in January, Eric and his Bloomberg colleague James Seyffart said there was a 90% chance of approval. Despite years of disapproval from the SEC, Eric and James were certain that the interest of big Wall Street players like BlackRock and Fidelity would tip the scales and incentivize the regulator to approve at least one spot Bitcoin ETF. Fortunately, the SEC approved several spot Bitcoin ETFs on the same day Eric and James predicted, and the launch has been a massive success, the biggest launch in the history of ETFs. Though the past 2 weeks have been somewhat mellow for the ETFs, especially compared to the first 7 weeks of unprecedented demand from investors, Eric believes the spot Bitcoin ETFs still have a long way to go before demand begins to fizzle out. According to the senior Bloomberg analyst, a massive $30 trillion market now has free access to Bitcoin through the newly approved ETFs. Financial advisors control about $30 trillion of advised wealth in the United States. Eric and several other experts expect that at least 1% of that will be pumped into Bitcoin ETFs gradually over the next weeks and months. All spot Bitcoin ETFs currently have a combined AUM of just over $50 billion and about $12 billion in inflows. Tens of billions are in, but if these estimates are right, there could be hundreds more to come. The effect that will have on price is almost unimaginable. As we bring you clips from Eric's recent interview with David Lin, please take a little time to like this video, subscribe to the channel, and turn on post notifications so you never miss any of our regular uploads. Thanks, and enjoy the video.
I've been ever since the BlackRock filing last June. Bitcoin, I think, was around 30,000. And since that filing, there was a more and more good news, and it was sort of like a buy the rumor. And that drove the price up 60%. When they approved it, there was a little bit of a sell the news event there. But then the inflows were so strong, right off the bat, they were strong, but I expected that. But then they had this really big second wind. And it's really rare, even for a hyped up new launch. Normally there's fanfare the first couple days. Then it kind of like settles into an equilibrium. And then maybe down the line, it catches fire again. Who knows? This one like caught fire like in the fourth week and went straight back up in terms of flows. And I think that helped the price kind of come back, because in my opinion, it feels like there should have been more pullback after the sell the news, because you go up 60% in anticipation. Normally, there's a sort of come down that's way deeper than we saw. So I think that the robustness of the ETF flows helped sustain the run up and then some. And so I do think it's very related, because there hasn't been a ton of other catalysts in the Bitcoin market. Some have even argued that a lot of the narratives are kind of gone. In fact, this use of a currency. So I think that the ETFs were massive deal, and they should be. ETFs are the preferred vehicle of most professional investors and especially advisors. They're fast, they're good, they're cheap, they're easy. It's like putting your band's music, on Spotify. You are where the fish are biting. So just by having a Bitcoin ETF, it opens up a ton of new investors. So I think the price largely is moving off the ETFs. I've seen some days where the ETF's taking money, the price still sells off. So remember, ETFs only own 4% of Bitcoin so far. There's many other people who can move the price, but I'd say it seems like half of them never trade. So the float is smaller, but still, ETFs are still a minority owner. But they're the new kid in town. They're the ones that have been like the positive catalyst. So I would say for now, yeah, the ETFs are a big deal. the launch was really tremendous. It's sort of cooled down a little bit the last week, but overall, we're talking about 12 billion in net flows and 55 billion in total assets. Those are numbers that I would that our predictions had those numbers after 12 months, not three. So that just tells you where they are. And I thought we were one of the more optimistic teams out there. So they've kind of already reached our 12-month predictions in 2.5 months. I think though, what's interesting about this era of Bitcoin, it seems like the fourth time this thing has survived like a world war. I mean, Bitcoin is like a cockroach in terms of its ability to like come back from the dead. And that's why I respect it. It isn't going away. I think it was supposed to go away three times now. So I think now we're at this more mature level of like the mainstreamification of Bitcoin. So I think institutions don't need to wait for a rally. I think they're sort of like looking at everything and going, okay, it's not a currency, but two things. One, we don't want to kick ourselves if it goes to $1 million. I call that like future FOMO cure. And number two, everybody's sort of awakening to the fact that like, the dollar has been devalued and inflation can steal your money and you get less of your actual returns. Your real returns are less than what your portfolio shows. And this could be a way to protect from that because it's, again, a store of value. So I think for those two reasons, even if people aren't true believers, they might be interested to allocate to it. And so I think that's pretty powerful. I think that it didn't have that before. And I think the ETF and having people like Larry Fink, who is the head of BlackRock and Fidelity, and these gigantic, massive American institutions, the asset managers, having them involved and sort of like backing it is a big deal.
During the interview, Eric also discussed the past week's ETF outflows, the effect on Bitcoin's prices, and how much longer he expects it to continue. According to Eric, a TradFi native, Bitcoin might be a few $1,000s from its all-time high, but it is still up by over 100% in the past 6 months and about 150% in the past year. Eric also believes the price declines were caused by crypto natives taking profit as soon as Bitcoin exceeded $70,000 earlier this month. Despite these factors, which Eric maintains are completely normal, BlackRock's IBIT continues to maintain an impressive inflow streak. According to Eric's latest Twitter post on the topic, IBIT has recorded inflows for 69 consecutive days, an impressive feat for an ETF based on an asset that was considered a no-go area by investors just a year ago. Eric's post reads, IBIT inflow streak is currently at 69 days. One more day, and it moves into the top 10 and ties with Jets, a streak I was equally as fascinated by. The Bitcoin ETFs are still breaking records and recording new milestones. Let's get back to Eric's interview. This time, he addresses widespread claims that BlackRock and other ETF issuers have been stockpiling Bitcoin since last year, and that stockpiling was responsible for the move to new all-time highs. Here is Eric's response to those claims.
No, because the way ETFs work, these companies they're like Vegas. They don't want to be like when the Vegas has a sports book. They're not taking a side. They just want to make the small big in between the two sides. These companies are just like that. They don't want to be long or short Bitcoin. So BlackRock was not going to buy Bitcoin before. They were simply so when they launched it, they lined up an investor, perhaps, or a couple, to give them money on day one. And then as they went forward and got more flows, every time they get new investors, they go buy the Bitcoin. And if an investor leaves, they sell the Bitcoin. They do not want to end the day long or short Bitcoin. Neither do the market makers. They're just like a casino in that way. They just take a small vig, which we call the expense ratio, or in market makers' case, the spread. And it's a tiny, tiny little vig. I think it's a fair trade-off for the outsource, to be able to outsource all this to somebody else. And so they would never buy it before. The run up before, I think, was a lot of crypto people and hedge funds. A lot of hedge funds bought the discount in GBTC. It was trading way below its NAV. And that discount was going to close if it converted. So a lot of prop traders were buying the GBTC discount, which to me probably also lifted the price of Bitcoin. So that's who I think bought it before. It was all speculators. It wasn't the asset managers launching the ETFs. They only bought Bitcoin when they started to get customer orders for it. All I know is that over time, you're going to see inflows and outflows. Anybody could see this if you look at like GLD or SPY or even Vanguard funds see outflows. That's just how ETFs operate. But what I was trying to say was Don't let one outflow day make you cry like a little baby. Some of these people, I'll be honest, like they they want like 10% returns every day. And when they get nice rallies, it goes on for like 18 straight days.
Yeah.
On the 19th day it goes down, they flip. And it just reminds me of a little baby, like a spoiled little baby. And I'm like, listen, relax. It's fine. You're up like as you said, you're the best performing asset this year. You're running circles around the NASDAQ 100. What else do you want? So ARK has one outflow day. The 10 of them still saw net inflows. ARK, $87 million. When ARK has seen 50 days of inflows out of like 55, it is no big deal. Like, in fact, that's why I was saying, just relax. What you'll see is people go in and out, but over time, categories grow in net positive. So, and I see the same thing happening here. And there could be a downturn where Bitcoin's down 30%, and maybe 6 out of 10 of them see outflows in a week. Well, it's okay. Over time, as the category builds and ETFs are popular, the category will grow. And generally, ETF investors are stronger hands than people think. I do not see 100% of the investors running for the hills if Bitcoin goes down 30%. I bet you'll see some people, maybe 10%, right? 10% of 55 billion is 5 billion. So 5 billion outflows in a week. People are like, oh my God, but it's not that. It's okay. Over time, though, I see that 55 billion slowly increasing, and most of the people are going to stay. ETF investors, here's why. Most ETF investors are 60-40 types. They have stocks, bonds, and they have it saved for retirement. And they're going to wait 30 years for that to grow like a tree because it's got a compound, which is where the magic is in investing. But they're bored. So they leave that alone, and then they have a little allocation, which I call hot sauce. And they'll go and they'll find stuff that makes their blood go, gets their blood going, or they feel like is like going to make them have FOMO. And Bitcoin to me is where this goes. It's in the hot sauce bucket. And because you have all of your serious money covered in the 60-40 S&P 500 kind of portfolio, you don't have as much jitteriness with this little allocation to Bitcoin. That's why ETF investors tend to be a little better behaved.
Meanwhile, 3 advisors have just invested almost $60 million in Fidelity's FBTC and BlackRock's IBIT, a testament to the continued heightened interest in spot Bitcoin ETFs by all categories of investors. Here is a tweet from Eric. We have a new high watermark for investment into one of the Bitcoin ETFs. 2 different advisors each put in $20 million to FBTC. One is from Kansas, and the other is from Minnesota. The percentage of the portfolio is also pretty high at 6% and 5%, respectively. This edges out the $17 million an advisor put in IBIT. In a follow-up post, Eric discusses the importance of these new investments and how there is still so much more to come. The post reads, "Here's the homepage from the Kansas advisor that just plowed $20 million into FBTC. This is as boomer as it gets. It is likely a wonderful sight for those hoping to see long-term adoption and an absolute nightmare for the RIA Skeptics branch of the Underwhelmers Club. We still have 5 to 6 weeks of more 13F reporting like this. We could see 500 to 1,000 firms like this, reporting holdings once the dust settles. And that's just one 13F season. There are 4 in a year. The advisor, the United Capital Management of Kansas, has put 4.965% of its portfolio into FBTC, and it seems to have embraced the full spirit of the cryptocurrency industry. Its recently updated homepage now shows a cheeky message for crypto investors. The message reads, "We are coming for your coins, degens." As Eric said, this is as boomer and conservative as it gets. Yet, this firm is quickly embracing the free spirit of the crypto industry, and there is still so much more to come. How crazy do you think things will get within the next few weeks, especially with the Bitcoin halving out of the way, which means fewer willing sellers? Please drop your comments and observations in the comments section below, and don't forget to give this video a thumbs up, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.